Hey all, in this video we're going to discuss the very important topic of volume price analysis. If you have the skill to apply volume price analysis and if you understand what it is, you will become a better opening range break trader. You will be able to better read the pullback and better trade the continuation setup, and you will be a better trend trader. So let's go ahead and take a look at what it is, and let's take a look at many examples of volume price analysis applied. So first of all, volume are the amount of transactions. In order to find stocks in play, we need to have a lot of volume. The more transactions, the better. Now, what is volume price analysis? Volume price analysis is the combination of reading the price action, so reading the candlesticks, in combination with the volume candles below it. So we're going to combine the volume, we're going to read the volume in combination with the price action that is getting printed. So for example, here we see the chart. We see the 1 minute chart in Intel. Here we see the price action. You see like the first candle of the first minute, the second minute, and the third minute, etc. Below, we see the volume. First candle, 3.3 million shares traded. Second minute, 1.6 million shares traded. We also see like a bar chart, so we can see like how much volume there was relative to the previous amount of candles. So for example, the first minute, it always makes sense, like the most volume. It's always like the first minute, the first candle has the most volume of the day, usually. Second minute, a little bit less, third minute as well. And here we see the pullback, we see even less volume. Price action continues and we see higher volume. This is all information that we're using in volume price analysis. So we're combining the volume, we're reading the volume below in combination with the price action. And to begin with, there are many different applications of volume price analysis, and we can't all focus it. If I would focus on explain everything for volume price analysis, I would be explaining for 2 to 3 hours at least. That's not possible. We're going to discuss the most important application of how I use it for trading the opening range break setup, for trading the pullback, for reading the continuation setup and the high of the day setup, etc. It's a very crucial skill when reading price action. If you're a trader and if you're trading one of these setups as discussed, especially with the trend, also against the trend, you want to read the price action on the 1 minute chart. And the volume price analysis, combining the volume candles with the price action candles, is an extremely powerful tool. What is the main goal? The main goal of using volume price analysis for the opening range break setup, for the continuation setup, and for catching the trend is anticipating the next move in the direction of the intraday trend with a higher probability. And I'm going to draw it here. Price action always moves in waves. Okay, that's very important to understand. If the price action moving up, it moves in waves. If it moves sideways, it moves in waves. If it moves down, it moves in waves. Okay, so that wave is like how I call the mother of all movements. For the opening range break and for the continuation setup, we would like to catch the wave up. So let's say the price action moving up, we get the pullback and we want to catch the second move up or the third move or the fourth move. That could also be possible, of course. Therefore, it's also called an ABCD. We get like an A, we see a B, then the C is the pullback, and we see the fourth move. So this is what they call ABCD setup, and basically it's the same as a continuation setup. Now we're using volume price analysis to read the pullback in order to anticipate with a higher probability the move up. So in other words, price action moving up, then we get the pullback, and then we're trying to read the price action in order to hopefully catch the next move up. And in this part, especially in this part, in combination with this part, we're gonna read the volume candles. We're gonna apply the volume price analysis in order to anticipate with a higher probability the second move, or of course the third move or the fourth move. So let's go ahead. Here we see INTC or Intel. 9:30 the market opens. What do we see? We see a first move down, first wave down. Okay. Then we see here the pullback as discussed. So basically together it's the ABCD move, right? A, B, C, D. And then we want to read the price action to anticipate the C to D move. Okay, what do we see? We see the move down. We see the red candles. and then we see the pullback, we see low volume. And the price action continues with higher volume. So basically we see the red candles, this is the volume. On the pullback we see lower volume, and then we see this candle, this is again a red candle, for the start of the potentially of the second move, and we see higher volume. This is a clear sign, clear volume price analysis that, of course, taking the whole context in consideration, that there's a higher chance that the price action will make another move down. This is the volume price analysis. As discussed, price action always moves in waves. It's the mother of all movement, the wave. And we're trying to catch one of these waves up, and they work the best, in not always for, but like depending on your style of trading, directly after the market open. And then we are going to apply the volume price analysis in the pullback to catch the next move. And also, of course, the continuation setup could also be happening within the opening range break. And now we're going to show you many, many examples later. So what is the idea? We want what we want to see, and it's very important. So, and this is with regard to the mother of all movements, the move up, pullback, and another move. We want to see volume in the first move, because volume makes the price action move. So if there's like a candle up, another, and it could also be the other way around, because short and long is the same, but it's just vice versa. So let's say the price action moves up on volume, another candle up on volume, another candle up on volume, and we see the price action, there's good volume. And then if we see, so it means that there are actually buyers, there are more buyers, and of course because the price action going up, and there's like a lot of volume, and that means it's also significant. There's really the buying happening and just pushing the price up. But then of course, so basically we see this, we see them moving up, moving up, moving up, and it's happening on buying. However, the buying gonna take a pause, because everybody knows the price actually moves in waves, so they're gonna be like a little pause. And then they're gonna be some profit taking. Perhaps parties who bought here are gonna take some profit. Perhaps parties who were like in it for a way long time ago are gonna take some profit. So we see like a little pullback. And what we want to see in that pullback, we want to see lower volume in that pullback. Because if this, here's the volume is a little bit lower. So for example, moving up on significant volume, significant volume, significant volume. It's always important. We always judge the volume compared with the volume previous. So it's always relative to what's happened before. So we cannot look at one candle, one volume candle thing and say, this is a lot of volume or this is not a lot of volume. Actually, in some circumstances it could be, but in general not. But we use it in comparison to see relative wise to the previous candles. So here we see the move up, we see significant volume. And then in order to be able to anticipate it, the next move with a higher probability, when we want to see a little bit less volume, right? So now we see on the move up, we see significant volume. On the move down, we see lower volume. It means that the buyers on the move up have taken a little bit of pause, and there's going to be some profit taking, but it's not really significant. It's not really the price actually moving down, but it's not really like a lot of dumping happening. It's more like a pause. You see the move is up on volume and the move down. It's more like a pause. It's not really like the sellers are jumping in and dumping all the shares. No, because in that case, there would be high volume. But we see like a pullback with low volume, and that's a good sign. And then if the volume comes in again, it looks a bit like the rocket's going to start again, the buyers getting in for another round of buying. So that's the idea of trading the ORB, the continuation, the pullback, or the whole trend, and using the volume price analysis. So in case of a long, and short could be the same, in case of a long, we want to see the move up with higher volume, and we prefer to see the pullback with low volume. And we're going to take a look at a lot of examples in a bit. So we see the low volume on the pullback on lower volume, meaning that the sellers are not really jumping in. It's more like a pause. And let's take a look at a few examples. Okay, here we see the chart of nvidia. And let's especially take, because we see definitely a trend up, but especially take a look at this part. Okay, this part of the price action. What do we see here? We see a move up, right? So first of all, we see like an opening range, and we see a move up, and we see a pullback, and we see like another range, and we see another move up, and we see another pullback, and we see another move up. So basically the price action has been strong. And here we see, if we're starting from here, we see like strong candles up, right? Candles closing above 50% of the candle. And we see also significant volume. And why significant? You see it's higher volume than the previous average. Also, like this line is like the average, and we see clearly volume higher than the average. We see the move up going to the high of the day. Then we see the pullback as discussed, the red candle. And what do we see? We see lower volume, right? Then we see this candle again, and we see high volume. So this is exactly what I explained before. We see on the move up, we see high volume. In the pullback, we see a low volume, lower volume, declining volume. And then we see the start of the second move, we see the high volume again. And then we move up again on high volume. So what do we see? We see the buyers getting in, really significant, pushing the price up with volume. Then we see basically a pause of the buyers, diminishing volume, and we see again the buyers stepping in for another move. And of course, this specific example is also very beautiful because we see really nice candle. We see like the candle becoming a little bit smaller, taking a pause. We see the pullback, in the pullback also the candle is becoming smaller. So basically, like you can really see that the sellers are taking, or like that there are no more sellers anymore. That there was of course some selling, some profit taking, but it's really diminishing. You see the volume is becoming smaller, the candle is also becoming smaller. A very strong candle closing at the high and high volume. It's a beautiful, beautiful continuation setup, right? This is like the mother of all movement. We see the move up, pullback, another move, and we can really see that in the candles and in the move. And of course, also very important, there's room to move because we see the price action is in a trend, and it's not like intraday, at least because there's only the intraday price action running into support or resistance. Now we don't see that. There's a lot of room to move. The trend is strong, and then we see again the mother of all movements with beautiful volume signals. Let's go ahead. Let's take a look at a few more examples. Here we see PAF. We see the market opens 9:30. We see the move down. We see high volume. We see a pullback, and we see significant low volume, right? So we see the sellers, significant pushing the price down. Yes, 2.2 million shares traded in the first minute. It's a lot. Opening, coming up, pushing back at the low. It's a very, very weak candle. Coming down, we see the pullback is also a very hard rejection because volume price analysis is comparing the volume candles with the price action candles. However, we also have to consider, and we can take a lot of information from actually reading the price action candles. And this is of course a very clear rejection, right? We see the move down, we see the pullback on low volume, and we see a hard rejection. This is the L1, it's the first low, officially low after the pullback. And here's a potential entry. And also, of course, here's an entry. It would be like the 5-minute ORB for a short. And you can really see like the volume price analysis, right? Bigger volume on the move down, lower volume in the pullback, and also the price action showing rejection. So what is the application of volume price analysis in the opening range break setup and the continuation for trend traders to analysis of the balance between buyers and sellers in the pullback? So we see the move up, then we get the pullback, and then for hopefully, of course, the second move up or the third move. So we're going to analyze the balance between the buyers and the sellers in the pullback, and this is the pullback. Or this B2C move, the A, B, C, D. So that is the application of volume price analysis. We're looking for low volume in the pullback, or we're looking for low volume in the bottom of the pullback, which is also a very, very good sign for another move up. Let's take a look at another example. Here we see ENPH. And of course, the daily chart is very important. The pre-market price action is very important. We need to have a stock in play, but that's not for the scope of this video. This video, we're really looking at the volume price analysis on the candles. And it could also be used on all the other different time frames and different types of candles, but we're really focusing, of course, on the opening range break setup, on the continuation setup, and the pullback. So here we see again, we see the move up on stable volume moving up, and we see the pullback. See that? Moving up, pullback on low volume, right? We see really the pullback on low volume. Here we see already the buyers coming in on the 1 minute chart, on the price action, and here we see also the volume coming in. So what's very beautiful about it, we see the move up, high volume. There's the profit taking, the pass of the buyers on low volume. That's a very good sign. And of course, also if you read the price action on the 1 minute chart, we see like the clear rejection candle. We see the green candles again. We see a beautiful trend line. Like it's also what they call a bull flag, right? We see the move up. We see the move up. And then we see the bull flag, and then we're breaking the trend line. We break the top of the bull flag, and we see the green candles coming in. Still low volume, still the buyers did not come in, but definitely it shows that the sellers did not continue, and their entries possible. I entered already here. I took it first for the 1 minute ORB or the 2 minute ORB, the opening range break, because this is the first opening range. And yes, of course, the daily chart and the pre-market price action are all very crucial in this aspect as well, but that's not where this video is about. It's about the volume price analysis, a very beautiful example here in ENPH. Let's continue. Here's BABA. A little bit later on the day, 10:15, so 45 minutes in. I took it here short and took a little profit. What do we see? If you structure the price action, we see a 5-minute opening range. Price action stays actually all the time in the 5-minute opening range, and here finally we catch the trend. See, we see a first move down, we see a pullback, we see a second move down, and we see again the pullback. And what do we see in the pullback? We see again, this is the green candle. We see red candle, red candle, red candle. We see significant volume. We see the green candle, or in this case it's white because I have the color white, but it's like a green candle because it's closing higher than the low. And we see significant low volume, right? Here we see the rejection again, and we see higher volume. So here we can see again an application of the volume price analysis. So we see the move downs, like the mother of all movement. We see the pullback, and we see potentially another move down. This is also what they call, again, the A, B, C, D. And it's also very important to note, of course, that we're no longer trading in the opening range. Here's the opening range. So really there's like room to move, at least intraday. But in this setup, there's also room to move on the daily chart, and there was a stock in play. So there's no potential support ahead. And we see a beautiful trend happening, and we see the pullback. And then we see the volume price analysis. We see also the candles, of course. We see the move down, pullback, rejection, closing all the way at the low. Another weak candle. We see the volume price analysis, a beautiful short. Volume price analysis, reading the pullback while taking all other factors in consideration as well. Another example, Rivian. What do we see? Well, we see the range here. We see a very significant break out of this range. Actually, we see it also on significant volume. We see the pullback happening, and we see low volume, right? Bottoming. Also, if we read the price action on the 1 minute chart, we see the price action coming down, coming up, coming down, coming up, coming down, coming up. It's a triple bottom. 3 times the price action coming down, getting bought back up. Entry here, stop loss just below, because we don't have to put our stop loss wider, because our thesis is that the price action is going to continue. And so it's a technical stop loss. But the most important thing is we see the low volume in the pullback and a significant volume when the price action was breaking out of the range. Let's continue. Also a very beautiful example in VALE. Stock is in play, daily chart, pre-market interesting, but that's not what this video is about. This is about the volume price analysis. We see the first 2 candles, red candles, significant volume. We see the 2 green candles. Okay, the first is green, this one is indecision, and we see very low volume, right? We see the 4th candle and the 5th candle red again, and we see high volume again. So it means that there is like a lot of selling in the first 2 minutes, then there's like not so much happening, perhaps some profit taking. We see low volume, and the selling happens again. That is the part where we can jump in and try to make a profit. So basically it's like an opening range, very clear opening range, but within the opening range we're reading the 1 minute candles, and these 1 minute candles really show the sellers taking a pause, buyers not really significant stepping in, and sellers stepping in for another move. We see the ABCD move, right? The mother of all movements within the opening range. So there's always a lot of overlap between the continuation setup and the opening range break setup. Basically, we're looking for a continuation setup or an ABCD setup within the opening range. And we are continuing. Here we see CRM. And this stock was also very much in play. And we see like here an opening range, price action breaking down, not convincing, but never breaking the pre-market low, which is here. And we see the price action. So here we see the 5-minute opening range breakdown, not convincing, but here we see a 3-bar play more or less, and the trend continues. And we see really the price action selling off, right? And I think we see here also a very beautiful entry. We see here again the triple top, retesting this previous range. So basically we see a downtrend. But what is very important about it, we see lower volume in the green candles compared with the red candles. Let's start from, for example, from here. We see the opening range and we see the breakdown, and here we're breaking down again. What do we see? We see on the green candle, we see low volume. On this green candle, we see low volume, right? Here we see a little bit lower volume. We see a little bit low volume, and I apologize for all my drawing. But you can really see like on the green candles, lower volume, lower volume, lower volume, lower volume, right? Also here, also a lower volume. So basically it shows that each time there's like a little pause of the sellers, not the buyers jumping in, there's simply like a little bit of pause, perhaps some profit taking, but it's not really that the buyers are jumping in and taking over the trend again, reversing. No, it's just a little pause of the sellers. Another example, coin. Also a 5-minute opening range. You see the market opens 9:30, we see the move up, we see a red candle, and what do we see? Lower volume, right? We see the volume increasing from the second, third, fourth, increasing, and here we see like a pullback and a low volume. Here we see again the green candle, and we see a little bit higher volume. These are very, very subtle but beautiful signals that there was actually more like a pause of the buyers and a continuation set up for the move up. And of course, also we see again the triple bottom, right? 1, 2, 3. Price actually coming down and shooting up. We can see it 3 times here, and of course, it's always about everything together. We also see like the 5-minute opening range and the breakdown for the move up. But in this video, we focus on the volume price analysis. Another example, VEKE. We see the move up. So 9:30 market opens, we see the move up. We see a red pullback candle, the third candle, and we see low volume, right? Price action moving up. We see a red candle. What do we see? Pretty low volume. Price action making here the pullback, low volume. So again, the same principle, volume price analysis. Another example, we see maybe a little bit small, but we see like the price action moving up. We see like in the middle also like some kind of a wedge forming, price contraction, price action breaking out. And what do we see? The red candles have a little bit slightly subtle, but very clear, less volume, right? Price moving up, pullback, low volume. XPEF, also interesting. We see price action moving up. This is like the A to B move. Again, like 9:30 market opens, we see the A to B move. We see the pullback. What do we see? Low volume, right? Every red candle has like low volume. Then suddenly the volume coming in again, a strong candle, and the trend turns around for a C to D move. So the C is always the low of the pullback, and we're trying to catch the C to D. And one of the ways how we can do it, to predict with a higher, not predict, anticipate with a higher probability the next move up, is by using volume price analysis in the pullback. And this is the pullback, right? And the pullback, we're reading the volume price analysis. Another beautiful example, BMY. We see the 1-minute opening range. After 5 minutes, we see it's also a 5-minute opening range because it's the highest and the lowest point of the first 5 minutes, so the 5-minute opening range. And here we break down. And if we look at the volume, what do we see? We see the green candles moving up, and we see very low volume, right? This candle convincingly closing below the 5-minute opening range. At that point, it's an opening range break, and if it closes below, it's also the confirmation after the 5-minute opening range break. And we see also higher volume. So basically, these green candles were basically, or as a matter of fact, they were on the low volume and then confirming the sellers breaking down again, the sellers stepping in. Volume price analysis. Another one, ANF. They had earnings, and the first 2 minutes there were actually no volume. Sometimes in NYSE stocks and YCE, the volume comes in a little bit later. We see here the opening range, 1 minute. Actually was in the third minute because there was no volume in the first 2 minutes, closing above the pre-market high. We see a red pullback candle, and we see the third candle again strong, closing above it. And we see again the lower volume in this red candle, meaning not that the sellers came in and jumping in after the move up. No, it was just a little pause of the buyers. And the trend continued. And here we see it as well, actually. See the trend moving up, reading the price action. We see a little pullback, and it's not even a pullback candle because it does not make a new 1 minute low, but it's basically just a sideways candle, closing a little fraction lower than it opened, so a red candle. And it was extremely low volume compared with a very steady volume in the move up, small pullback candle, and another steady move up on the high volume. So in this price action, there were two great volume signals: move up, low volume in the pullback, another move up. It's very strong, significant move up, low volume in the pullback, another move up. I hope that you enjoyed this video and that you find it very interesting. It's about the topic of volume price analysis. It's very important. Volume price analysis is a very broad topic, and in this video I shared and explained the most important way of using volume price analysis, in my opinion, for the opening range break setup, for the continuation setup, for the trading the pullback and the trend. And they have like a lot of confluence. There's a lot of overlap between these four different setups. It's with the trend, and we're always looking for multiple. The best setups have like multiple setups. There, for example, and they're like an opening range break 1 minute, and there's like an opening range break 5 minutes, and there's the beautiful continuation setup, and there's the volume, etc., etc., and there's the beautiful daily chart, and the stock is in play. Should be a lot of overlap because trading is extremely hard. I'm not here to tell you trading is easy, go start doing it. No, trading is extremely hard, but it's very interesting and it's very fascinating. In case you have any questions, or in case you're interested in joining my group of one-on-one students that I have every week, one-on-one classes with, one-on-one coaching, and that I do every day together the pre-market preparation with, just send me a mail at info@tradingwithlenny.com. I hope you enjoyed this video, and I see you next time again.